You're watching WGN Midday News.
But first, it's not too early to start preparing to file your income taxes. We're getting some expert advice on what you can do now to save more later.
In today's Your Money Matters, tips on how to get the most back from your 2013 tax return from Cliff Morgan. Cliff's founder of Strategic Wealth Incorporated. So there are things you can still do for to benefit your 2013 taxes.
Yeah.
So let's start with this $250 above the line deduction for school teachers. We all know that school teachers spend out of pocket money, their own money, for class supplies. They can get something back on that, right?
Yeah, a lot of times, I mean, a lot of this comes down to having detailed record keeping. So a lot of times they just don't bring it to their accountants. They don't claim it on TurboTax. They don't do it on tax cut. They just need to, throughout the year, have the receipts or go back on your credit card bills, find where you did spend money. For a lot of teachers, that will save you maybe $100.
Yeah. Something they shouldn't have to do in the first place is spend that money, but they do. That's a fact of life, so good to know. The Affordable Care Act kicking in this year. There's some things you can do there's a penalty you pay if you don't take advantage of that, right? If you don't have health insurance.
1% of your income. So did you make $20,000, $40,000, $50,000, $100,000 this year? If you had to pay 1% of that because you didn't go onto the website to be able to make sure that you had the health care, that adds up, and especially over a period of time, especially for multiple family members.
And amazingly, there are people who are going to choose not to have health insurance.
Yeah, I mean, I would go onto the site and I would start it. I mean, there's a lot of things happening in Washington, but...
You bet. What about the deduction for mortgage insurance? I didn't know there was a deduction for mortgage insurance.
So...
It's disappearing this year.
It's going to disappear this year. So you might want to go and talk to your mortgage lender about that, where if your loan is over 80%, there's professional mortgage insurance that you're going to have. So if you're paying the mortgage insurance and you're counting on that deduction, it will go away this year. So you need to bring that into your financial calculation.
There's some special rules for seniors who have IRAs, individual retirement accounts. They're mandatory distributions they have to take.
Right, and it gets significant. Where at 70 and a half, you have to start taking money out, and it can be 3%, and it goes up to 10% a year, where you have to pay a 50% fine on it. But neat idea that's here that I think we've got here on this is if you take out the money early for charitable reasons, you don't have to pay tax on it, so you have more that you can give away. It will help you from an estate tax perspective, and it doesn't count as part of your charitable deductions on an annual basis.
Okay, and I'm reading here it would also qualify as your required, minimum distribution.
It will count for it for the year, and you don't have to pay tax on it. So it's a nice way the government is saying, this is a good thing for you to be able to do to be able to help other people. Find a worthy charity.
Good stuff to think about right now. You can take advantage of it. Cliff Morgan, good to have you in. For more information, visit strategicwealthinc.com. We'll be right back. Good to see you. Happy New Year.
And to you.